Modest gain expected for stocks at the opening bell. Market watcher of the day is Gregg Smith, with me here right now in New York City. Why buy stocks at all right now?
Hey, good morning, Stuart. Look, I don't know how illuminating I'm going to be today in telling you anything that you don't already know, but first I want to give a big happy birthday shout out to my father, Elliot. Happy birthday, 90th birthday.
90?
90. So
Elliot,
big
happy
90.
Birthday,
happy birthday. And to my best friend and better half, Robin, another birthday, so a big week.
Robin, happy birthday, big week. Okay.
Anyone else? Go through the list. But look, I mean, it's a very difficult time to tell you, I don't need to tell you what we already know, that the Fed's got caught, flat-footed. We're going to keep raising rates until we can arrest inflation. And I don't think it is a good time to buy stocks until we see signs of inflation beginning to abate and when we see the Fed begin to take their foot off the neck of the market.
Fair enough. Well, do you buy anything? I mean, what investment vehicle do you put your money into?
Look, I joined you 3 months ago on June 23rd, almost to the day, and you probably thought I was crazy when I began to quote the Torah. And I said, this is a Shemitah year, and in a Shemitah year in the Torah, you do nothing. You sit and do nothing, and it ends on Monday. So the Shemitah year ends on Monday, on the 26th. So we'll see if it's a time to do anything. But right now, I said you don't chase stocks, you don't buy stocks. And by the way, the Dow was at 30,677 back on June 23rd. It's up 30 points in the 3 months from there. So
but you
I think you sit on your hands. But you didn't answer the question,
Gregg Smith. You did not answer the question. If you're not putting money into stocks right now, what do you do with the spare cash? Leave it in cash?
I think safety is king right now. I am continuing to hold ETFs that I have. I'm holding on them. I am suffering through some losses in them. But I believe that once we see signs of inflation abating, the market is going to rip. The market will want to rip higher. I don't know if that's next week or in a few months. Everybody is looking for telltale signs of inflation beginning to abate. I've looked at the used car market in the last few weeks, and I've seen prices of used cars decline by 6 to 10% in the last 2 weeks alone from sources that I have. So I don't know if those are signs of people that are beginning to dial back and spend less. Certainly used car prices went through the roof because there was no supply of new. But even on the new side, dealers are telling me that inquiries are dropping precipitously. People are coming in less. So look, the Fed's job is to be the big, bad, scary wolf here. They want to scare the markets down, and they want to scare people to sitting in their homes and to stop spending money to slow down the economy.
Gregg, I'm not sure whether I've asked you this or not, but every other market watcher on the show, I've asked this question. What's wrong with buying a one-year treasury right now, hold it to maturity, you get 4.05% interest with a tax break involved? What's an absolute safety? Now, what's wrong with that?
Look, it could be better than being long equities. And, I mean, with the S&P down, 19% or so this year. So, capital preservation could be king right now. And again, I'd rather pay up for equities when I know that things are going to begin to turn, because it's going to be impossible to pick a bottom. I'm not going to try and pick a bottom, and I'd rather pay up.
You are determined not to say,
look, owning treasuries, sure, could be fine. Yields will keep going up. It'll pressure the prices. But look, it's better than the alternative of losing money in equities, perhaps. So
he who loses least wins.
Correct.
That's my theory.
Correct.
Gregg Smith, thank you very much, sir.
Thank you, Stuart.
See you later.